Hey guys, this is Chris Mincola with the Mincola Group over at West USA Realty, and I'm here with Andrew Fisher of Modern Home Lending. And today we're going to be talking about some ways that this is going to sound crazy in our current market. If you haven't heard of 3-2-1 buy downs or 2-1 buy downs, you can actually get rates as low as what, 2%, Andrew?
Yeah, so that effective rate, the seller is paying the difference of that. So an awesome tool about that in this market where the interest rates may be a little bit higher than what most are used to or what can afford, you have the opportunity that if we start with a rate in a 5%, your effective interest rate in that first year could be in the 2%.
Yeah, and guys, it's really a good deal because we can negotiate the seller concessions for you. In other words, we can get the seller to pay for those rate buy downs, basically, in a nutshell, to kind of put it in layman terms. And that's no out-of-pocket cost for you. Nets them a little less, but it's pretty common right now, and we're good at negotiating those things. We always have done that in the past. In the crazy market that we just had, that was a little harder to do, but now it's actually at least 50% of the time or so, people are doing this anyway. So it's pretty common. Sellers are expecting it now, or if they're working with a good realtor, and a lot of our buyers are getting this. So anyway, let's and I would just say that right now, with the way the market has kind of balanced out, we're really in a balanced market right now in the Phoenix area. So it's a good time to get a really good deal on a home. And, we're not seeing the crazy market that we're seeing before where you couldn't even do an inspection or appraisal without getting an offer accepted. Right. So anyway, Andrew, why don't you take us through really quick? Let's take a listing. One of our listings, we'll look at that in Litchfield Park, Arizona, and then kind of take us through conventional and VA veteran loan on what that would look like in a breakdown and how much money they can save versus just doing a regular fixed rate right now.
Absolutely. Sounds good. Yeah, so the awesome thing with any buy down program, whether it's a 3-2-1, a 2-1, a 1-0 even, you do still have a fixed rate mortgage. So a common misconception is that, the rates change or it's subject to what the Fed interest rate is, like a HELOC. That's not the case. The seller's just making those payments for you, making the difference of those payments.
Right.
So
Big
right
difference.
here at this listing, this is a great example in Litchfield Park, listed for 585. Now with this buy down program, you can go, 20% down, even more. You can do as low as 3% down, which is something we're very common in this market that we're seeing. So for this home specifically, if we're looking at conventional, say we're putting 10% down, which allows us to have up to 6% in seller concessions. We're taking a loan amount of 526, 500, and say the rate that you're actually, signing on the note and what you're getting is 5.25. If we look at a 3-2-1 buy down, your normal principal and interest payment is going to be a little bit over 2,900 a month. That first year, you're looking at just over $2,000 a month. We're looking at almost $900 in savings. And that's not, something where your interest rate is adjustable or anything like that's changing. The seller is simply paying that almost $900 a month for you for that first year. So you can always refinance out of this. You can use any unused funds towards your future refinance. But even if you don't refinance for 1, 2, maybe even 3 years, the savings you're getting, I mean, even year 3, getting an effective rate of 4.25, it's an awesome way to go.
And right now, Andrew, just as a little bit of a perspective, again, I know it changes by the day, changes by the hour and all that, guys. So whatever we're showing you today could be much different tomorrow. Okay. But we see that rates are trending down right now on a conventional, like this. What would you say right now people are getting just with modest credit, not with super great credit?
Right. Well, as far as concessions, I mean, we're seeing as far as the interest rate we are seeing in the fives, with lower credit, maybe seeing the stuff in the six, but things are definitely, I mean, we had a pretty significant drop last week and even,
Yeah.
a couple weeks before. Things are definitely on the upturn. I mean, inflation rates are going down. We've even been seeing gas prices come down. I mean,
Yeah.
that's a good sign that, interest rates could be coming down. So you might be saying, hey, why would I take this, buy down, or why would I purchase now? Well, as you and I both know, when interest rates come down, competition is going to heat back up. a home that you might have been able to get a discount for now is going to go up in price later on. So
Yeah, and like you said, inflation has pretty much peaked already. Obviously, what's likely to happen is inflation continue to come down, and less again, what's likely, right? Anything can happen. Crazy stuff. Our government prints a lot more money, or some crazy things happen in the market. But what's likely with the way things are trending is we're going to see that trend down. So, what does that mean for a government loan? Let's take a look at that, Andrew. What does that look like on a VA?
absolutely. So with government loans, we typically see lower interest rates, and that's because a portion of it is backed by Department of Veterans Affairs or Housing and Urban Development. So if we take the VA, which you can do 100% financing, and if you can see down here, maximum seller concession limits, the VA allows you to take out quite a bit in concessions. Um, and that asterisk is actually even a little bit more. So you can still take advantage of that 3-2-1 buy down. But for our VA clients, for example, putting no money down, $0, and having sellers give you concessions to pay for a buy down program and your regular closing costs, you're virtually only coming in with paying $650 for your appraisal and however much your home
Wow.
inspection costs. So if you look at this 3-2-1 buy down, seeing rates in the 1%, even when interest rates were at their best, a year and a half ago, you could maybe get that. You could get it on a 15-year mortgage. You can maybe get that on a 30-year. I did one refinance for the VA that was under 2% on a 30-year loan.
Right.
But effectively, your year one, instead of paying that $3,000 a month, putting no money down, seller is prepaying $961 a month for you. Next year, 663. Year after that, 342. It's huge savings.
Yeah. Yeah, and it's really a big deal. I mean, you're talking for about every 1%, it comes out to roughly about 10% savings in a payment.
Yeah,
So, guys, I mean, if like Andrew said, if we're trending right now around the fives to sixes, depending on the type of loan you're doing and your credit, then I mean, you're looking at what 30-40% almost, right?
right.
On a payment difference. That's huge. I mean, these like you said, these are numbers like we had a year and a half ago. So that's possible. And then obviously, if things keep trending this way, Andrew, this year into next year, we should be looking at a lot of people wanting to refinance, right?
Absolutely. And I've been saying, I'm sure you agree, you can always change your interest rate. You can refinance when rates get lower, but you can't change the price of what you paid for that home.
Right.
So buying now while the competition is lower and you can get homes at more of a discount than what they're actually appraising at,
Right.
this is the time to do it. You can always change that interest rate later.
Right. So, Andrew, anything else you could share with us on this that people might want to know about the 2-1 or 3-2-1 buy downs, or what they should know about getting a home loan today?
Right. Yeah. Well, with the home loan, if you get seller concessions, which, like you said, I've been seeing it in most of my files over the past couple months, it's gone from a market where it was next to impossible to see seller concessions, where now it's next to impossible to not see seller concessions. You
Yeah.
can take advantage of these, have them pay all your closing costs as well as this buy down program. And you can also use that for this is called a temporary interest rate buy down because it's only set for a couple of years. You can do a permanent interest rate buy down in addition to, concurrently. So there's a lot of different ways to use, sellers concessions to your advantage. I recommend always reaching out to a licensed loan officer and seeing what's going to be the best way to really utilize that. Because a lot of times asking for concessions is going to make a lot larger impact on your monthly payment than it'll be asking for a discount on the price of the home.
Yeah, and again, it's pretty common, guys. Sometimes people look at me like a deer in headlights when I say we're actually better off getting you this type of loan or buying down the rate, or a combination because of the fact that your payment's going to be that much lower. And if you want to pay more, you always can, right? But
Yep.
coming down $10,000 on a price point is only going to maybe save you $60 a month, $70 a month with the current, something like that with the current rate. So it makes a lot more sense when you look at the numbers to do this, because then you just have that much more in your pocket, or to even buy down the principal, right?
Right. Yeah. At most price points, you're going to get a lot more bang for your buck actually getting concessions and putting it towards that rate rather
Yeah,
than, dropping the price of the home. 10,000 price of the home versus 10,000 concessions, big payment difference.
yeah. So, Andrew, you are a specialist in VA, especially since you are a Marine. So, guys, make
Yeah.
sure you reach out to us and Andrew. Andrew, how did they get in touch with you?
Yeah, feel free to always give me a call or shoot me a text. My personal cell is 623-826-6147. Or you can always shoot me an email at andrew@modernhomelending.com.
Awesome. And guys, of course, at the Mincola Group, you can always check us out at mincolahomes.com, mincolagroup.com. You can find all the social media links there, or you can reach out to us by phone or text to reach Cynthia and I both at 480-788-8569, or email us at home@Mincola Group. That's MINCOLLA group, GROUP.com. Thanks a lot, Andrew. Thanks a
Thank
lot,
you.
guys. We'll talk to you next time.